Live from Washington, D.C., this is Balance of Power with Joe Mathieu and Kailey Leinz.
President Trump tells Bloomberg that Iran has agreed to suspend its nuclear program. Welcome to the Friday edition as markets rally to new highs on the Bloomberg headline with new hopes that the war with Iran could be ending. I'm Joe Mathieu alongside Kailey Leinz in Washington. Kailey, crude oil plummeting here, and we don't even have a deal yet.
No, although the president did tell Axios he thinks a deal could happen in the next few days, potentially more talks in Pakistan this weekend to finalize things, as he told our colleague Kate Sullivan that everything is pretty much hammered out at this point, including, of course, the Strait of Hormuz, which, according to President Trump, Iran has agreed to never close again. Iran, of course, maintaining today that the Strait transiting it still would need coordination with its armed forces, according to state media, also saying that if the blockade is to continue that the U.S. Navy has in place, as President Trump suggested, then the Strait would close again. So we still do have some remaining questions at this hour.
We have a lot of questions, actually, and thankfully, Kate Sullivan got the president on the phone to answer some of them. We're going to actually spend some time with Natasha Hall from Chatham House, an expert on the region who might give us a little peek behind the curtain when it comes to negotiations. I found it fascinating that he told Kate Sullivan that he was not sure J.D. Vance would even go to this next round of talks, presuming it takes place this weekend. I thought that was his assignment.
Yeah, at least it was the first go around, maybe not so on the second. We also need to consider as well what this ultimately means for the restart of energy production in this region, knowing how many countries have had to shut in production because of inadequate storage capacity and infrastructure that has faced some damage. It's one thing for the Strait to be open, which is not necessarily guaranteed at this point. It's another for things to get back to normal. And we've been repeatedly told on this program and across the network here on Bloomberg TV and radio that is a process that could take some time.
So when you see crude oil now in the low 80s, at least for West Texas, it makes you wonder if there could be a lot more volatility ahead.
Yeah, well, a lot of volatility certainly is taking place today, though it's in the positive direction if you're long equities. Let's get a check on all of the activity now as we turn to Charlie Pellet up in New York. Charlie, happy Friday.
Thank you very much. And here's what's going on. Happy Friday indeed for the bulls, on track for a winning week. Looking at a week in which the S&P 500 index right now is up by 4.5%. That would be the third week of gains, 3% plus for the S&P. Today's numbers, here's where we stand. We got the S&P at 71.44, rallying 102 right now, up 1.5%. And the Dow Jones Industrial Average, 1,113 points higher, up by 2.3%. NASDAQ at a record, as is the S&P. NASDAQ up 401 now, up 1.7%. NASDAQ 100 index also at a record, up 1.4%. All of this with the VIX just above 17. The 10-year, 4.23%. The 2-year, 3.69%. Gold up 1.6%, 48.67 the ounce. While West Texas Intermediate crude, this time yesterday, we were talking about crude above $90 a barrel and moving higher. 83.43 on WTI right now, down 11.9%. Barrel of Brent, 89.19 right now, lower by 10.3%. So on a day with a lot of optimism, just about everything higher. One notable exception after earnings, Netflix shares, they are plunging. Netflix down 9.7% right now. This is the company gave a forecast for second quarter that fell short of analyst expectations. Again, recapping, big move to the upside for the equity market. S&P up 103 now, up 1.5%. West Texas Intermediate crude, 83.46 a barrel, down by 11.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your hosts, Joe Mathieu and Kailey Leinz.
All right, Charlie Pellet, thank you so much. Clearly on track for a positive end to the week on what has already been a positive week for equities. On track, in fact, right now, at least, for the S&P 500 to have its best month going back to 2020. It's just incredible, the relief we are seeing in these markets that seem to be perceiving the conflict with Iran as pretty much over, or at very least taking solace in the idea that the Strait of Hormuz is back open for business, though that isn't necessarily guaranteed at this point. But it was, of course, at 9:06 a.m. that President Trump took to Truth Social to say Iran has just announced that the Strait of Hormuz is open. Unclear if that was a typo, Joe, or a Freudian slip of some kind. Of course, he followed that up with the Strait of Hormuz is completely open and ready for business and full passage, but then said in that very same True Social post that the naval blockade will remain in full force. And Iranian state media is suggesting that could be an issue that could close the strait once again. So clearly nothing is final until it's well and truly final, and we're not quite there yet.
Well, no, that's also why we're going to talk to Bob McNally from Rapidan later this hour. As he says, it's all about the barrels. And we're watching crude oil tumble 12% today without a sense of when the market will rationalize itself. And the president has not detailed, to your point, exactly what the exit plan is going to be here.
Although he did give some detail to her colleague Kate Sullivan on the phone earlier today, as we've mentioned, on the nuclear program specifically, which we understand in the first round of talks with Pakistan was the real point of difficulty. And he says, though Iran has yet to confirm this, that Iran has agreed to no further nuclear enrichment, not a moratorium of some period of years, indefinite.
That's kind of like permanent. So we're curious about that. And he says there's also a deal to collect the dust, as he calls it, that highly enriched uranium that is presumably missing, or I guess he says it's deep underground thanks to the B-2s. That would be in itself a huge operation to unearth and get that out of Iran. So we've got a market that is clearly extremely excited about what's happening, but also we're going to try to acknowledge the reality of the moment while we're at it.
Indeed. And of course, Bloomberg's Tyler Kendall's pretty good at acknowledging reality and the facts we know as we know them.
Let's go to the White House right now with the aforementioned Tyler Kendall on the North Lawn of the White House with the very latest that we're hearing from the administration. Tyler, take it away. Are we going to hear from the president before his speech tonight in Arizona? Has there been any messaging outside of the phone call with Kate Sullivan?
Well, Joe, at this point, we have been watching President Trump's posts on Truth Social, a flurry of posts today that have really put out some more details, but also, as you and Kailey are discussing, a lot more questions as well about if, when, and how this potential deal will be implemented. Now, as you mentioned, this call with Bloomberg News' Kate Sullivan earlier today, saying that Iran has agreed to suspend its nuclear program indefinitely, and that in exchange, the U.S. will not be unfreezing any Iranian assets. That appears to push back on reporting earlier today from Axios that one of the potential options on the table was that the U.S. would get this stockpile of enriched material in exchange for an unfreezing of about $20 billion in Iranian assets. Now, we should say that we have not heard Iran comment on any of these potential concessions, and at least publicly leading up to today, a lot of these points were points that Iran was publicly pushing back on. So we'll have to see where the diplomacy ultimately lands and goes from here, because we're getting these posts out from President Trump. And in terms of that stockpile, any sort of developments around enrichment levels or the stockpile would be very significant, because the messaging ahead of today was President Trump saying that Iran was not going to obtain a nuclear weapon. But experts had pointed out that that wasn't necessarily a development, because at least publicly Iran has been saying that they're not trying to pursue a nuclear weapon, despite assessments by the U.S. and regional allies to the contrary. But the fact that we're trying to glean some details here about those specific enrichment levels and what would happen to the stockpile is significant. Joe and Kailey, though, when it comes to this stockpile, earlier reporting today indicated that there was still some gap between where the U.S. and Iran do feel on this issue. We know that the U.S. wants to retain that stockpile. They want that stockpile to go to the U.S., whereas Iran has previously said that they want to dilute it inside the country. That is raising questions about whether or not perhaps a third-party country would somehow get involved here in overseeing what ultimately does happen to that material.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much, as always, for the latest reporting as we try to keep track of what exactly is happening here. And let's get some analysis on what at least we're being told is happening, and if that matches what the reality may actually be in the region, as we turn to Natasha Hall, Associate Fellow at Chatham House, who is back with us on Bloomberg TV and radio. Natasha, good to have you, as always. Given the fact that we have not yet heard from Iran confirming much of what the president has indicated in terms of how close a deal is and what all the deal is going to entail, would you join what is clearly some degree of euphoria we are seeing in financial markets today in terms of your confidence that this really may be on track to being over?
Thanks for having me. I think that this might be some short-term euphoria, because we've already seen the IEA essentially say that it would take about 2 years to get back to normal, especially for LNG markets, because we've seen about 80, oil and gas facilities damaged in the region, and there's a backlog essentially. So we'll see what happens with the markets once this euphoria dies down and once we see what's actually going to happen with these negotiations, because we've seen a lot of mixed messaging on whether the negotiations are even going to continue. We saw Iran say that it's going to open the Strait of Hormuz, and yet we also saw Trump say that he's going to continue the blockade on Iranian ports and vessels. So it's really unclear what's going to happen. We should know more and get better clarity within the next few days. But then I've said that before, and it's actually gotten even more confusing as time has gone on. But right now we're in a very fragile ceasefire, I would say. So good to see that markets are rebounding, but we'll see if that is actually maintained.
If there were a breakthrough, if there were a peace deal, Natasha, some might argue that the hard work begins with the idea of political saboteurs in Iran and throughout the region. Bring us inside that conversation. Who would you be most concerned with when it comes to maintaining a peace following this conflict?
I mean, I think that's an excellent question, because I think too often with the media, with headlines, we concentrate on the ceasefire, on the agreement being signed. But on the ground, political and military dynamics shift as those agreements are signed. And we've seen that in Gaza, and we've seen that in Lebanon, and certainly we'll see it here as well. There are a lot of details to be worked out, as your reporter mentioned, when it comes to enrichment, which again, we've been talking about for a long time. And if the Iranian regime is saying things like it's going to freeze its nuclear program or its efforts towards a weapon, that doesn't actually differentiate its points in the past. So a lot of very complex technical questions when it comes to enrichment, enriched material, and there's a lot of spoilers here, and there's a lot of ways that Iran could continue to make money through these negotiations, either through released assets, though the administration has denied that, or by applying tolls to vessels as it goes out. I mean, the fact remains that Iran now knows that it has this leverage, not just over the United States, but really the global economy. So there's that, and we haven't really seen the Houthis come into play. We're still waiting to see what happens in Lebanon in the fragile first hours of this ceasefire, but a lot can go wrong.
Well, it's an important word of caution, Natasha. And as we consider the notion specifically around the Strait of Hormuz, the idea that Iran is now declaring it open today, even if there may be some caveats to that, does that not mean that at any point in the future, Iran, if it so chooses, could also decide once again to declare it closed? I just wonder if we should really be treating this as if it's some kind of return to normal, if we're ever going to be able to go back to what the pre-normal was in that regard.
I think this is the biggest geopolitical loss of this entire war. Essentially, we saw that Trump said that Iran will never, ever close the Strait of Hormuz again. But the entire reason that Iran closed the Strait of Hormuz, something it's never done in the past, was because the U.S. and Israel went to war with Iran. So now it knows that it has that leverage. And that's a real loss, I think a real geopolitical loss for the United States, for the Gulf countries, and for the rest of the world, that this now probably more extreme regime knows that it can do this.
More extreme regime. The president says exactly the opposite. Less extreme, more reasonable. Who will we be sitting across the table from if this, in fact, does resolve into another meeting this weekend? The president says it won't be J.D. Vance on our side. Who will be on Iran's side if we get back together in Islamabad?
Well, if the last talks are any kind of measure, we know that Araghchi is a very skilled negotiator. He knows the details of the nuclear program and many of these issues, so he will likely play a part. And we've seen other figures that have been involved in Iranian politics for some time. But the more we see of these figures, we see that they're much closer to the IRGC and more extreme elements of the Iranian regime. We're not really necessarily seeing reformists. But again, these are sophisticated, skilled negotiators. They know the ins and outs of the nuclear program, obviously, of the past negotiations with the U.S. administrations. And so I think what we need to be focused on is who's going to be on the U.S. side negotiating, because it's unclear to me that those that have been involved have that level of detail to be able to really hammer out some kind of real agreement that doesn't see a return to war or a freeze on the global economy.
Well, Natasha, on this idea of hammering out detail, we have seen kind of a repeated pattern with this administration. Historically, I'm talking about in the context of trade deals, where an agreement is announced in principle, that there's some kind of understanding, and we don't actually see everything finalized and codified, if you will, in terms of a formal treaty. That a lot of those details just never fully worked themselves out. And I wonder if you think that we could see something similar taking place this time around, that the president could declare, there's an agreement in principle, we have a deal, but nothing is signed, approved by Congress for some kind of a period of time, and what kind of volatility we might expect in that interim period.
Yeah, and I think that's a great point. And that was my point about the details being worked out, because the Iranians probably know how to sort of manipulate those details so that President Trump has some kind of win so that he can save face, but saving face superficially, in fact. And so, I get a little bit concerned about the original problem, which was Iran's nuclear weapons program, because I do see a lot of ways for the U.S. to want to walk away from this in order to lower gasoline prices here at home, amongst many other things, for the midterm elections. So there's a lot of political reasons for him to walk away from this, or to have some kind of superficial agreement that doesn't actually solve any problems.
The president has said that he's reopening the strait not because we need it, but he's doing it as a gift to the world. Enter the UK and France, and this was before these headlines broke, had planned to host a summit to set up their own naval force, a new sort of coalition of the willing that they're calling the Maritime Freedom of Navigation Initiative. Keir Starmer says the summit will include about 40 nations. Natasha, will that still be needed if the strait is reopened, so to speak, during this period in a peace deal with the United States? Or is every nation or every region going to be on their own with their own defensive force like this?
I think so. I mean, I think that even if this summit doesn't take place, this is going to, alter many countries', various contingency plans. And we saw this coming, with, I think, the increasing irrelevance of the UN and its ability to solve problems, that you would have increasing numbers of so-called coalitions of the willing, some of which would not include the United States, in order to get things done. And we've seen this with Canada's leadership talking about, moving away from the United States, having its own, economic and political and military deals with other countries. I also don't think that bodes well for the United States as a superpower in the future as well, because you'll increasingly see that the United States isn't solving problems, it's creating problems that others need to solve amongst each other. And so, with this closure of the Strait of Hormuz, most certainly we're going to be talking about alternatives to the Strait of Hormuz more significantly, in terms of pipelines, in terms of other countries creating coalitions in order to secure their own resources. So I don't think this is a sign a deal and done and we're back to normal. I think many countries are working on what their contingency plans are for the future.
She's one of the smartest voices on the region, and I'm delighted that we could get some time with Natasha Hall. Thank you so much, Natasha. From Chatham House, Associate Fellow with insights that we will carry through the hour here, and more news developing from the Middle East. We've got our eyes on Truth Social, and we've got our eyes on the markets. We'll update things coming up and assemble our political panel on this day that Wall Street is betting the war may be ending. This is Bloomberg.
Pertaining today to the Strait of Hormuz and Iran's nuclear program, some of those headlines being driven by a phone conversation that took place today between our colleague, Bloomberg's Kate Sullivan, and President Trump. Yes, she got him on the phone, and he says Iran has agreed to no more nuclear enrichment, not a moratorium for some period of years, indefinitely. They will not be doing this. At least that's what President Trump says. We have yet to hear from Iran on that matter, but we are hearing from Iran on a separate matter. Back to the Strait of Hormuz, Joe, remembering that President Trump said the Strait of Hormuz is completely open and ready for business in full passions, but the naval blockade will remain in full force. Iran's foreign minister, through a spokesperson, is now saying a naval blockade is considered a violation of the ceasefire, and Iran will take action if that U.S. blockade persists.
We're just running headlines on the terminal now. Indeed, Iran, a naval blockade is considered a violation of the ceasefire, which we are technically still in until Tuesday, even though people are talking about a peace deal today. We don't have one, Kailey, and I think Natasha Hall just described that ceasefire as very fragile. So this is important, and we're watching Wall Street pull back a bit from the highs. It's not necessarily on this headline, but an S&P that was up over 100 points is now up by 92 points. We reached new highs for the session, though, as Kailey mentioned, because of the most important reporter in the world today. That would be Kate Sullivan, who joins us right now. We got her on the phone. We figured if she's calling the president, we'll call her. Trump says Iran to suspend nuclear program won't get funds. The headline. Kate, what mood was the president in when you got him on the phone? Was he as optimistic sounding as this market today?
So when I spoke to him for a few minutes this morning on the phone, he did definitely sound optimistic. You know, he was saying that most of the points are finalized for the deal. He said it'll go pretty quickly. He did say that there were probably going to be talks this weekend. It definitely seemed like the president, and I think, you know, we've seen the posting that he had, the post that he had on Truth Social definitely seemed very optimistic about a deal that could come very quickly. There are two big points that I wanted to highlight. I asked and I tried to drill down on whether this would be an indefinite suspension of their nuclear program, or we had seen reports that perhaps the U.S. had proposed a 20-year suspension, so a temporary suspension that would expire after 20 years, and that Iran had countered with a 5-year. There are all these questions about whether this would be a temporary or indefinite, and the president was very clear. He said, no years, unlimited. He said, I asked him a couple times whether this would be indefinite. He said, no, unlimited. And there also were reports that the president wanted to clear up about whether the U.S. would be releasing billions of dollars in frozen Iranian funds. The president was very adamant that that was not something that he was going to do. I asked him twice about this, whether he was going to release the $20 billion that had been reported on. He said no. And then I asked, are you going to release any funds at all, any of these frozen funds? And he said no. There were a lot of things that we covered in this phone conversation. One other thing I wanted to highlight was that he said he hadn't decided whether J.D. Vance would be leading these talks that he said were probably going to take place this weekend. I thought that was very interesting because Vance, of course, led the last round of in-person talks, the first round of in-person talks that did not produce a deal.
Well, so on this notion of who goes to Pakistan, Kate, it's worth pointing out the president did tell reporters yesterday as he was leaving the White House that he would be willing himself to go to Islamabad if it was for the purpose of inking a deal. If we finally got to the signing point, he didn't indicate to you, did he, that he himself might be making the trip if he really thinks a deal is this close?
He did. He did. Actually, I asked him if he would go to Islamabad to sign a deal, and he said, we may. And he hasn't, throughout this entire process, had a lot of positive things to say about Pakistan, the prime minister, the field marshal. He praised them on during our phone conversation. He said, I have great respect for the prime minister and the field marshal. He definitely left the door open for he himself to travel to Islamabad to sign any kind of deal. It wasn't my impression that he would be leading any kind of talks. I believe that would be at the lower level. He said we'd be sending a team. He mentioned Jared Kushner and Steve Witkoff, who've been key negotiators throughout this process. And he also praised Vance, but he said he hadn't decided who he was going to send. But the president did again say, after telling reporters yesterday, I asked him if there were any scheduled plans for him to actually go to Pakistan. He said that he may go. He may go himself.
Amazing stuff. Kate Sullivan, after being on the phone with the president, now on the phone with us, live from Las Vegas, Nevada, where she, of course, is traveling with the president in the press pool. And that means Kate will be keeping us up to date on whatever else we hear from the president today as he makes his way from Nevada to Arizona for a Turning Point event later today. Kate Sullivan, we so appreciate it. Thank you for being here on Balance of Power. And I also will extend a pre-thank you to our political panel who is joining us now. Jeanne Zaino is with us, Bloomberg Politics contributor, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, and Democratic analyst alongside Republican strategist Lester Munson, head of the international practice at BGR Group. Thank you both for joining us. Lester, as we consider the notion of to what extent we should expect President Trump to be the face of this ultimately if a deal is to get signed, knowing he wanted to be the one to announce on Truth Social the progress that has been made to this point. He's picking up the phone with, it seems like, a lot of different reporters today because he's clearly enthusiastic about these developments. Would you be surprised if we see him going to Pakistan, if not this weekend, sometime soon for this?
Well, I think he'd be happy to do it. There'd be questions about security and just the logistics, of course, and that may be a bridge too far. But this is clearly going to be a big part of President Trump's legacy, for positive or negative. So I think he's right to say, I'm willing to do whatever it takes to make this thing work, because at the end of the day, his entire presidency and maybe his life will be in a significant part, judged on the success of this particular policy.
What questions are you asking right now, Jeanne? Because we have a lot of them and not too many answers. Kate Sullivan brought us directly to the source with the President of the United States, but we're not even sure, as he just told Kate, who will be representing the United States if there are talks this weekend. Is the market getting ahead of itself?
First of all, one question I'm asking is if you and Kailey have your cell phones on, because you may be getting a call that you need to go to from the president. Yeah, that's right. There's so many questions. Let's just take a step back and say in the last 48 hours, we've had a ceasefire agreement that is very unstable and a lot of saboteurs who could get in the way of that. And we've had the reopening of the Strait. That is what is prompting we're going back to the negotiating table talk. Mm-hmm. And as you and Kailey were just talking about, the Strait reopening is precarious itself. But even if you got the ceasefire and the reopening of the Strait, all that means is we are going back to the negotiating table. We don't know who will be there. I don't think the president should be there unless this thing is wrapped up with a fine bow. But let's think about where we are in those negotiations. That 10-point plan. They want withdrawal of the U.S. military from the region. They want sovereignty over the Strait. They want billions of dollars in reparations. They want the ceasefire with Lebanon to stick. And they want a lifting of all sanctions. And they want to be able to renew their nuclear program in potentially 5 years. That is going to take a lot longer than a weekend. So I have questions when the president tells Kate that, they've given up their nuclear program. This thing is pretty much wrapped up and we're good to go. I think he's really, really wishful thinking on his part. I'm not sure we've seen any of that in sort of the fine print we would need it to hang our hats on it the way the market seems to be doing right now.
Well, and of course, the market reaction is one thing, how investors choose to interpret these developments, Lester. Actual businesses operating in the shipping space, these commercial vessel operators, crews, with consideration of their cargo, need to decide if they think it's worth the risk at this point to transit the Strait of Hormuz. And I wonder if the most difficult step is the one that has yet to be taken, which is actually seeing more flow of transit through the Strait, or if there needs to be a lot more guaranteed in order to unlock that actually happening.
Well, I mean, just as basic a thing as are there any mines in the Strait of Hormuz? It's my understanding demining activities are ongoing there. So I think if I were running a global shipping company, that'd be my first question: is it clear of mines? And yes, of course, there's the shippers are the ones who are going to be really taking the risks here. And when we see the first commercial shipping start to go through the Strait, then I think we'll have a pretty good idea if this, how real this thing is. Right now, a lot of it is perception. Is the glass half full? Is the glass half empty? I do think President Trump, with the glass half full kind of viewpoint here, does seem to have a lot more credibility than maybe 36 hours ago. The Iranians seem to be coming around to an approach that works on his end. Of course, we have to work out all the details, particularly in the nuclear file. It can be quite complex. And then keeping open the Strait of Hormuz for commercial shipping. Yes, this is going to play out for several more weeks, I think, but this is certainly a good trend.
We should note that markets are pulling back quite a bit from their highs now. An S&P 500 that was up over 100 points is now up less than 80 points. The Dow's up 924, having been up over 1,100 points at one time. The Nasdaq's doing pretty well, still up almost 1.5%, up 314 points, but was up over 400 points at one time today. Jeanne, there's been a real reluctance to go long into the weekend the past couple of weeks, and I don't want to force you into being our stock analyst today, but you wonder, do people need to hear more concrete news to trust what's going on, especially with this most recent indication from Iran that keeping the strait closed by blockade is actually violating the ceasefire? Jeanne, we only have about 30 seconds. What are your thoughts there?
Yeah, they absolutely do. You know, my read of it is there's exuberance. Like so many people, you get the pop-up. The street is open. This war is almost over. There's exuberance that follows that on the market and with all of us. And then as you try to sort of look at some of the details coming out and you hear what Iran has said and you hear what the president has said and you realize how much more has to happen, I do think that sort of puts a damper on that exuberance.
Jeanne, thank you. We'll meet you on the late edition of Balance of Power. Jeanne Zaino, our Democratic strategist and Bloomberg politics contributor, alongside Republican strategist Lester Munson. We're going to talk to the sage of the oil markets coming up. Bob McNally will be with us from Rapidan. This is Bloomberg. As we kick off Bloomberg Business Week daily, and we've got our eyes glued on these markets, to Charlie's point, we want to dig a little bit deeper because we have seen stocks come off their highs and we've seen oil come off the lows. Still both big moves here today, but all things are, of course, relative. And when we saw the headlines from Iran, a naval blockade is considered a violation of a ceasefire that, of course, is in place until Tuesday. There might be some questions about exactly what situation we are in. Eric Weiner is our senior editor for America's Equities, and it's great to have you back with us here, Eric. We're trying to follow the bouncing ball here in a day that brings a lot of news here, and sometimes I know it's difficult for the markets to digest. Are we going to see a reluctance to go long into this weekend as we have in past weeks as we get closer to 4 o'clock?
Possibly not. It's a good point in that, you know, when you have this kind of uncertainty, you tend to have traders who are reluctant to do some buying towards the end of Friday and kind of wait and see. And yeah, there is a ton of uncertainty heading into the weekend. However, some of this is really structural. So you have this big move up this week, and you also had a bunch of traders who were, for lack of a better term, underpositioned. So once the S&P made this sort of decisive move above 7,000, a bunch of people had to buy in. And that's kind of what we're seeing. I mean, heavy volume today, and, this advanced move doesn't necessarily reflect huge bullish sentiment. What it does, look at is that you have these traders who really need to get in, participate in this rally, and they're buying in at these rates. So it sends things up, and you do need, those portfolio managers do need to hold those shares. So that's real, but what this means for Monday could be very interesting.
Well, especially considering as well that this market is contending with the idea that we're now in earnings season and they're getting a good look at fundamentals as well. And it right now seems like we're not seeing any material earnings erosion at this point from the energy shock we've seen in the Middle East, Eric. So I wonder how much we should be attributing what we are seeing, what we have been seeing over the course of the last many days, to the idea that fundamentals are holding in there beyond just the idea that some people were betting that this war was going to mean worse things for risk assets and now are feeling the rush to get in.
That's a big part of it. So when you look at, it's not just that earnings are coming in strong, it's that the estimates are rising. So really what you have is like traders hoping for an end to this, just getting back to a base level so that we can look at fundamentals. Because underneath the hood, when you look at individual companies, you're seeing really good returns. You're seeing really strong outlooks. You're seeing, an economy that remains resilient. But then, like you talked about Netflix, Charlie did just a little while ago, and you're seeing them get punished. And that's where, a bad outlook, and that was a kind of a surprise because everybody thought they were sort of insulated, but a bad outlook will really punish a stock. But overall, when you look at the base of what the market is right now, things are pretty good, and the earnings are strong. So if we can just get past some of the uncertainty and some of the hurdles of risk, things should do well.
All right, Eric Weiner, helping lead our equities coverage for us here at Bloomberg, joining us from world headquarters in New York. Thank you so much, as always. Of course, what we're seeing in equities also is largely, at least in some part, tied to what we're seeing in other asset classes. Bond yields moving lower today. Oil moving substantially lower today. Both Joe and Charlie mentioned, yes, we are off the lows of the session, but still we're we were sub 90 on Brent. We're at 84 on WTI right now. So these are materially lower levels than we were at, as this market is clearly anticipating that the flow of energy is going to start to pick up now that Iran and President Trump have declared that the Strait of Hormuz is once again open for commercial shipping. But is the market getting ahead of itself on that front? Let's pose that question now to Bob McNally, who is back with us on Bloomberg TV and radio, founder and president of the Rapidan Energy Group, also former special assistant and senior director for international energy on the National Security Council in the George W. Bush administration. Bob, welcome back. It's always great to have your expertise. I wonder what you make of the move we are seeing today and whether you view it as overdone, considering that the catch-up of flows, if you will, is something that has not yet fully materialized.
Hi, Kailey and Joe, and happy Friday. Yes, here we have another instance. And really what's remarkable about this conflict is how repeatedly successful the administration is, and they had an assist from the Iranian foreign minister, in inducing optimism and sell-offs in crude, rallies in equities through what we used to call in the markets verbal intervention. Let's just step back for a second. What has really changed? The blockade by the United States remains in place. Even the Iranian foreign minister clarified, yeah, the straits are open, come on through, except you have to go through the toll booth and you have to comply with the Iranian armed forces, which means it's closed. The Iranians have also said, look, if this blockade stays in place, all bets are off. So we've had very good headlines, very pleasing headlines. In this market, your previous guest, he had it right. He said, look, traders want this to end. This is a nightmare that no one thought was possible, and they can't believe is happening, and they just want it to stop. And so this is a market that's amenable, it's receptive, it's responsive to positive verbal intervention, and today is a great example of that. I think it's unwarranted. Unless we have a real breakthrough here this weekend, I think it's going to reverse, and I think we still have the world's largest oil disruption, which actually got a little bigger with the blockade on Iran's oil exports, still in place, and we have to deal with that.
Unwarranted, says Bob McNally from Rapidan. Bob, as you always say, it's all about the barrels. Even if this war ended now, say there's a deal this weekend in Islamabad, how long would it take for the market to rationalize itself back to the level of traffic we saw in the Strait before this began?
Joe, optimistically, so no more, no incremental damage to facilities, et cetera.
Yeah.
3 to 4 months at least on the oil side. For natural gas, Ras Laffan, my analyst tells me, Alex Munton, it could be years before those two trains are repaired. So gas, it could be longer. And in some cases, we may never get back in certain fields, like Rumelia in Iraq. We're concerned that huge field may never get back to where it was before, or it won't because we won't spend the money on it. On the other hand, other fields, believe it or not, come back stronger. You let them rest and actually come back stronger. So, but we're talking 3 to 4 months at least before the fields, the facilities, and the boats sort of queue up and line up and start getting things moving again. And even then, I would say, there will be a security premium because we will have learned Iran can do something that no one thought possible, or few did. As you know, Rapidan saw this, but few thought that anyone could strangle Hormuz for more than a couple days. Iran shows that it has, and it could again in the future.
Well, so let's get to then the shortages that either we are already seeing, which arguably we are, at least in certain parts of the world, or have yet to materialize, Bob, knowing that there obviously is a lagged effect in energy products leaving the Middle East in the first place and getting to their end destination. Those shortages are starting to be felt now. The IEA obviously warned yesterday that Europe could run out of jet fuel 6 weeks from now. Where will you be looking to, and what products do you think are going to have the most acute shortages first?
Right. It reminds me of COVID a little bit. When that started unfolding, it started in Asia. They had all the problems, the lockdowns and the pain, and we watched that. And then it rolled into Europe and then came here. And it's going to be a similar phenomenon. The famine is first in Asia, especially in diesel and jet. They just don't have it. They're too close to Hormuz. They're too dependent on Hormuz. And you have the Chinese and the South Koreans are big exporters of jet, of gas oil, of diesel, and they've stopped or they've slowed down. So Australia is having shortages, and other countries are having to drop their petrochemical facilities. So we're seeing demand destruction right now in Asia. Now those desperate Asians are now coming into Africa and the Northern Atlantic Basin and pulling barrels out of here, and then they'll come to the Gulf as well. The president tweeted that tweet from Rory Johnston of all the boats heading to the Gulf Coast to pick up oil because it's the only gas station in town, if you will. And so it's coming here. We may not have the physical shortages like Europe may have in some places for especially jet fuel. Jet fuel is the real one. And what we're going to be watching is product stocks, gas oil, what the Europeans call gas oil, we call diesel, jet in the ARA in Europe, even the Gulf Coast. Those are Rotterdam. Those are the places we're going to watch for big inventory draws. And eventually, when all those boats show up in the United States, and we were within a whisker of all-time crude oil exports last week, a few 100,000 barrels a day away, we'll see our crude stocks go down because we're going to empty out and send those crude stocks out. And then it'll become real in a way that we're not seeing it yet in the data that we get here in the United States.
Why? So it sounds to me like you're suggesting that physical shortages are inevitable. It's already too late to avoid them. Bob, correct me if I'm wrong, and I'm looking at a research note that you put out recently suggesting that China has large import surpluses to enjoy from before the conflict that eases some of the pressure on Beijing. Will China suffer the same fate as the rest of Asia?
No, China's doing better than Asia. China stockpiled like mad. They went on a tear for the last couple of years, importing oil and other commodities. So they have 1.2, maybe 1.3 billion barrels of crude in storage. Wow. Look, they're not enjoying the high prices. They're not going to enjoy not getting that discounted oil from Iran. But they are not facing the shortages that other Asian countries are. Indeed, they're on a case-by-case basis parceling out some of their precious refined product to curry favor with some countries that are starving in Asia for that.
Well, it's incredible to consider. And as we get back to the notion of, okay, China may be more insulated, other parts of Asia are going to hurt. Europe could be hurting shortly as well. Bob, we already know Europe had a problem post Russia's invasion of Ukraine as it was trying to wean itself off of Russian oil and natural gas, get more from the Middle East and the United States as well. Clearly, there's now going to be problems in everybody wanting to source it from places like the United States. Is there anywhere left to turn for the Europeans? Ultimately, if they can't reliably bet on exports from the Middle East, but they also don't want to have to turn back to Russia. And there's only so much that the U.S. is able to produce at this point, right?
That's right. That's why, unfortunately, it may not come in the form of, in some cases, it'll be shortages like jet fuel, but they will have to either pay the going price to bid barrels away from the Americas, away from here, bid those expensive barrels, or they will have to go without. And I think you're starting to see that. Refining margins in Europe are negative now. So refiners are starting to down tools, if you will, or reduce runs. And that's going to really create a situation where you have extreme price increases, and there'll be rationing to the people who can pay. And many people who can't afford to pay won't. And you're seeing airline flights, unfortunately, getting canceled. I'm supposed to go to London in May. I hope I go. But you're going to start to see market price-induced demand destruction, even in Europe.
Wow. Bob, we've only got about a minute left here, and I'm just looking at your most recent note that just went out this morning. With 20% odds, you assess 20% odds of a meaningful near-term increase in Hormuz flows, 50% odds that the status quo will continue. It's great to have you with us, Bob. Thank you so much for the insights. The sage of the oil market, Bob McNally, and the founder of Rapidan Energy. Really interesting and not encouraging at all, Kailey.
Well, it's so fascinating to hear the sobering words of analysts like Bob McNally, of geopolitical analysts like Natasha Hall, who are operating with a significant degree more caution than we are seeing play out in financial markets.
Yeah, we got a lot of cold water on this story over the past hour, although the S&P 500 still up 88 points, WTI $83. This is Bloomberg.